my really good real estate buddies and stuff like that for their needs. And that's when it was born on that side of things. And then I started doing affiliate programs and marketing out there. And that's when I was like, oh crap, let me learn my lessons the hard way, so on those things,
So what do you
realizing
said
no.
you're 10% back then? What do you think you're at in the last 12 months?
So like 1%, like or less. Yeah.
Wow.
So it's even, and usually if that's the case, if we have a default or something, they're usually friendly. And we're communicating with them saying, how can we help you guys out? Is there room for a potential second? Will you do a deed in lieu? Can we do a title search to make sure that you don't have any extra liens on this property? Because we want to know if we can do a deed in lieu.
Yep, of
Otherwise, if
course.
there's a second already, then we got to foreclose. And when does that process look like? So, it's getting our stuff ready, but then saying, hey, let's be as friendly as we can. We want this to work. If this borrower just ran into a bad situation with cash, maybe we can find a way to solve it. And we even
Yeah.
hooked up with like this credit card type company that would give homeowners loans on properties that they owned for renovation jobs for contractors. And we had the contractors helping with that aspect of things to get them some extra cash to finish projects. It's like, how do I not take the risk myself, but then help them in
Yeah.
that process? So
Yeah,
Mhm.
absolutely.
That's cool.
Well, I know Nathan is enjoying his visit with his daughter and school, stuff like that. Nathan, before you ask your final last question, I want to let everyone know.
Yeah.
I don't know the details yet. It's happened. I was on a call with Max earlier. There is a situation that if someone is active military, even if it's deployed or not deployed, they can go to their lender, and the lender would have to reduce their loan to below 6% while they're deployed or active. So just be aware, even if your borrower is at home, going to the hospital, being a nurse, but they're quote unquote active duty somehow or activated, they can show papers and you have to reduce their loan down to 6%. I don't know the details yet, but just be aware that that is something that just came across my desk within an hour ago. So, whew,
Oh, that's awesome. That's really
yeah,
cool.
go
All
ahead,
right,
Nathan.
Matthew. So what do you see? So 1% here in the last 12 months. Have you seen an increase, and where do you see the market going? Like I say, my concern with the short term is we saw things change very quickly, and I've experienced that myself doing fix and flips in the past.
Mm-hmm, mm-hmm.
How are you hedging against that, and what do you see coming?
So the first thing is I want to look at each individual market, and we look at the data of the market that we're in to understand what's happening in that market. And like looking at 2008, for example, a massive crash that could occur again because they just kicked the can down the road, of course, right? From the
Totally.
last time. And it's just the amount of debt they pumped in the economy. In my eyes, everything is really unstable. And I'm looking for farms where I can go make my own food and stuff like that because I don't know what the heck is going to happen, right? I'm a prepper, I'll call it, right? So at the end of the day, I'm definitely concerned about what's going to happen. And so if you look at the crash last time, it took literally like 6 years to get from top to bottom, 10% a year, five in year one, maybe even 5% in certain markets. And during the liquidity crunch, which is what my bigger concern is of a crash in the overall market, and a maybe crash in real estate prices with the lack of inventory right now on the market with a lack of demand because of a lack of affordability, I don't think we're necessarily undersupplied comparatively to demand. I think what it seems like is it's pretty even, if maybe a little bit more demand than supply, because you're seeing prices still start to rise over a period of time, but not crazy, right? I think
Mhm.
national average for like 2023 was like 6% or something, which is like what, that's crazy, but
Yeah.
inflation was probably 10, at the end of the day too. So looking out for that piece right now, if you're holding debt, that debt gets destroyed with inflation, of course, too, which is great from a property holding standpoint. But I'm looking at, hey, are we being conservative on our market values? When you're analyzing market values, if it's short term like that, they're in and out usually quickly. But if it goes down by 10% in a 12-month period of time, which is a major crash, if that
Mhm.
occurs, then what is going to, where's that property going to be? What's the loan to value at that point? And so I've dialed back my loan to values from like 70 to 65 many times, unless I know it's a really, really experienced operator with a lot of excess cash that could put in a
Yeah.
project like that to protect myself,
Yes.
Yeah.
I'm also, really looking at the liquidity of that borrower in depth and saying, where are they at with their cash situation? Are they sitting on a bunch of cash and they just don't want to use it all and they want to have their own reserves?
Mhm.
That piece of it is really important. And I'm also looking at markets that didn't have a major volatility in 2008 when everything crashed, right? And what kind of markets go down by a couple percent a year and go up by a couple percent a year that are a little bit more stable, like a St. Louis or a Memphis, Tennessee, or an Atlanta, Georgia that has gone up like crazy lately. But some of the sub markets, not necessarily. But I'm trying to be very conservative on where on the volatility of the markets that I'm investing in. So and look at where that is in comparison. I'm also diversifying into different asset classes and different types of debt too, outside of real estate, because I'm like, that's why I'm investing in debt invalidation, because in that side of things, that industry is prone to boom, over the next 10
Yes.
years, right? So and so that side, and mobile homes are very recession resistant. So I'm investing in those as well, not just on the debt side, but the equity side too. The last deal we picked up, we were adding 52 new units to the park and rehabbing 26. And based on our cost to value and our income, we should be at a 13.8 cap rate at our cost. Like, we put the refinance interest rate at 9 to be conservative, and then put the exit cap at 8.25 instead of 6.75, which is where market is, as if everything crashed and we're still hitting a 20% IRR. So I'm looking at
Wow.
the details of each investment I make, each loan that I make on this side. I actually like the fact that it's shorter term versus longer term,
Yep.
because if I'm locked into a 5-year loan and you're on a downward cycle of 5% a year every year for 5 years versus 5% in 12 months, and then I'm out of that transaction, and now I
Yes.
can recalibrate my market value on for that new next loan I want to do, and even build in a 5% discount, because I want to know where that value is going to be in 6 months from now or 8 months from now, not now. So I'm looking at
Yeah.
the last 3 month
Yeah, you
comps.
don't want to be the most positive. You want, if crap
Right,
happens, you're still protected. We do our bid calculators, right, all the time. Is that
right.
when we bid on something, we don't predict the best case scenario. A lot of people are bidding on stuff they expect perform forever, and things
Mhm.
may sell, they may default, may all stuff. You got to predict the fact that things could be bad, and if it
Right.
goes up, that's even just icing on the cake.
Yeah,
Well,
I
Matt,
agree.
I know Nathan has to go. I'm gonna do after hours
Yeah.
with you. Guys, if you need the replay, if any questions, the link for Matt is in the chat. Just fill the form out and he'll get the information from you, and you'll get an email from us saying Matt's information. Matt, it was an awesome conversation. I'm getting a lot of feedback. Thanking you for your
Yeah.
time and your
No problem.
Yeah.
information.
Thank you,
It was
guys.
awesome to learn, and I'm sure you'll be hearing more from you. Matt also has his own YouTube channel. Reach out to him and he'll share all the details you need from that. But for now, we're going to disconnect from the public. Have a great weekend, everyone. Take care.